Welcome to today's tax school session, in which we will specifically focus on the crucial topic of filing status. This session is designed to provide a foundational understanding of federal tax law as it pertains to filing statuses. Our journey through this chapter will equip you with the knowledge necessary to navigate the complexities of tax preparation with confidence. Understanding filing status is foundational in the realm of tax preparation. The filing status of an individual plays a pivotal role in determining the tax rate, standard deduction, and eligibility for various tax credits and deductions. It serves as a cornerstone in calculating the tax liability of a taxpayer. The Internal Revenue Service recognizes 5 primary filing statuses: single, married filing jointly, married filing separately, head of household, and qualifying surviving spouse with dependent child. Each status is defined by specific criteria and carries its own set of rules, which can significantly impact the outcome of the tax return. It's crucial for you to first-year preparers to grasp the nuances of each status to ensure accurate and beneficial tax return preparation for your clients. The single filing status is applicable to individuals who are not married, divorced, or legally separated under divorce or separate maintenance of degree by the last day of the year. For example, consider a taxpayer, Alex, who is 30 years old, single, and has no dependents. Alex would file under a single filing status. This status also applies to individuals who have been divorced or legally separated by December 31st of the tax year. This status is straightforward and is typically used by taxpayers who do not qualify for any other filing status. Married filing jointly is a status used by married couples who choose to combine their income and report it on a single tax return. For instance, Jamie and Casey, a married couple with no children, opt to file jointly to take advantage of the lower tax rates and higher standard deduction. This filing status often results in a lower tax rate compared to filing separately. Couples using this status must consider the joint liability that may arise from the tax return. It is important to note that both spouses are jointly and severally liable for the tax and any interest or penalty due on the joint return. Married filing separately may benefit couples who want to be responsible only for their tax because it allows married couples to file their taxes independently of one another. This status may be beneficial in situations where one spouse has significant medical expenses, miscellaneous deductions, or when the spouse chooses to keep their finances separately. An example of this would be a married couple, Sam and Taylor, who decide to file separately because Taylor has substantial medical expenses. By filing separately, Taylor can deduct these expenses without being subject to Sam's higher income level. However, it is important to know that choosing this status can lead to higher taxes for some couples and limits eligibility for certain tax credits and deductions. The head of household filing status is designed for unmarried taxpayers who provide more than half of the financial support for their household and have a qualifying person living with them for more than half of the year. A qualifying person may be a child or dependent relative. Notably, if the qualifying relative is the taxpayer's parent, they do not need to live with the taxpayer, provided the taxpayer pays more than half of the cost of keeping up the home that was the main home for the parent for the entire year. For other qualifying relatives, they generally need to live with the taxpayer all year as a member of the household. For example, if David is single and has a qualifying child living with him for the entire year, he may be able to file as head of household. Another example that may qualify for this status is Jordan, who is unmarried and supports her aging parent who lives with them. This status offers a higher standard deduction and lower tax rates compared to the single filing status. Qualifying for this status requires meeting specific criteria, making it essential for tax preparers to understand the nuances involved. This filing status is available to individuals who have lost their spouse in the previous 2 years and have a dependent child. Alex, whose spouse passed away 2 years ago and has a young daughter, can use this status to benefit him for the married filing jointly tax rates and standard deduction for another tax year. To qualify, the taxpayer must not remarry within a tax year and must maintain a home for a dependent child. For instance, if Sarah's spouse died in 2021 and she has a dependent child, she can file as qualifying surviving spouse for 22 and 23 tax years, assuming she doesn't remarry, which allows her to use the married filing jointly tax rates and the highest standard deduction amount. In conclusion, the choice of filing status is a crucial decision that can influence the tax obligations and benefits available to an individual or couple. As tax preparers, it is imperative to have a comprehensive understanding of each filing status, the criteria of eligibility, and the implications on the tax return. This knowledge ensures accurate and beneficial tax preparation for your clients, guiding them through the complexities of tax law with expertise and care. Real-life examples like those of Alex, Jamie, and Casey, and others mentioned throughout this practical application of these principles highlights the importance of the context of determining the most advantageous filing status. Thank you for your participation in today's session on filing statuses. This foundation, enriched by real-life scenarios, will serve you well as you embark on your journey as a tax preparer.